Hey, woo. Now, what's up, guys? We're gonna be talking about trends today in the markets. You guys have two type of trends. We're gonna get right into it. Okay, you have an uptrend and a downtrend. Okay, uptrend looks usually like this. Of course, the ranges are gonna be different, but the fundamentals are the same. An uptrend is when price is bullish and price is continuously expected to go higher. So as an investor, as a trader, you have the belief that price is going to continue higher, that price will increase in value. Okay, how do you talk? How do you know it's a downtrend, right? What's your other type of trend? Well, this is what a downtrend looks like. A downtrend is when you, a trader or an investor, believes that price will fall or continue to go lower. Now we're going to talk about how to spot these and the differences. Okay, boom, 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 and give me a sec. We'll come. So on the left side, you have a downtrend, and this is what a downtrend looks like. Right? Is you have a high and price is continuing to go lower. So here we make a low and then price goes up a little bit, and this is now considered a lower high because it failed to go above this previous high. Then you have the expectancy of price continuing to push past that previous low, which was here, and now you create a new lower low because price just continued lower. And after that, you have something called a prominent high, where you have a small move up, which creates a new lower high. And when you create this in this scenario where you're in a downtrend, you're not looking for price to reverse. You're going against the trend, and that means you're putting the odds against you. Now, if you continue with the trend and you get on that high, right, and you have confirmations and confluences, right, you look for sales because you know price is likely to go below that previous low to create a lower low. And sometimes you let those runners go and they continue. So that is a downtrend. Now, an uptrend on the right side is the opposite, is where you have a low, right? Say price consolidates, right? It's consolidating, and then you have a confluence, and now you make a high, right? And now you make a low, but this low doesn't go below this previous low. So this right here is already giving you confidence that price is going to continue higher. And now when price pushes up, once you excel to make a new high, right? When that new high gets approved, which would be here, expect a small pullback. Always expect those small little pullbacks. When you have that pullback, you'll have something, well, you'll create another higher low, and it's called a higher low because here's the previous low. We don't go below that, so it's above this. And price will continue higher. You can do another high, then make a small little pullback, right? And now you've created a new higher low because it wouldn't be below this one. But now, say price, right, goes to this low, right? All right, price comes below this low, and then it has a small pullback, right? And now your price is consolidating, and it does something like this. Now, this is where you have a change of character, a reverse, where price now goes from an uptrend to a downtrend. And the way you spot this is, here's our low. We didn't make a new higher low. We didn't stop. We ran past it, even if it's a wick. So that now will become a low. And say price goes up and it's kind of consolidating. You'll see price fail and reject off of a higher high. If that happens, expect trend to change. Same over here. Say price consolidates, right? Then price breaks through and it'll do something like this. Now you're in an uptrend because we've made a new high. Here is our lowest point. We didn't fail to go, or we didn't complete the move down to make a new low. So when that happens, you'll have other confluence with this to tell you you're in an uptrend again. That is trends, and we're gonna spot trends now on the chart right here. Okay, perfect example of a downtrend. Here was our high. Ready? Here's the low and high we're looking at. High, low. Lower high than this one, lower low. Lower high, lower low. We make a high, but then we make a lower low. Lower high, lower low. All right, lower high, and then price continues, and you see it again. Ready? This is what you call an external high, which we will talk about later. And then you could say this is your low. So say right here, you're looking at the chart somewhere here. There's a couple confluences, right? Say, oh, we just didn't make that high, and then this candle just closed, and that's your confirmation, right? You would sell, and you can see price goes here, makes a lower low, right? Then comes in this high, right? Which is still lower from the previous high. So what do you expect on the next move down? For it to make a lower low. And you'll have some moves like this, which are just significant pushes down. And you could see trend will continue, right? Low, lower high, and then you could see price consolidate. And then that's when we see usually a change of state, break of structure on the opposite side, or you will see price continue in the same trend, because here, high, then lower high, and now you can look for sells for a new move down. And I did use this method today for 2 little trades. We're gonna screenshot it on a 50K account right there, just using downtrends for the day. Shorts from here, we failed to make a higher high in this range. We had a point of control, and we had confluences for the downtrend.